Welcome to another Ronel Talks Money show. Today we are going to demystify the economy, and we all hear all these terms all the time about CPI and monetary policy and repo rate and downgrading and junk status. But do we really know what all these terms mean, and how does it really impact on all of us who are basically the man on the street? And today we have a special guest with us, and he's probably I don't know if you get a ranked or a rating, but he's probably South Africa's number one economist, Dawie Roodt. And Dawie, welcome and thank you so much for joining us today.
Thank you very much, Ronel. It's very nice to talk to you. And maybe I can just start off by saying one thing about the economists, and that is economists are always trying to make easy things very, very complicated. So when you hear difficult words like repo rate and CPI and that sort of nonsense, always remember there's something very, very, very easy to understand behind this complicated sounding words. They only sound complicated.
Okay, now that's good news, and I think that is exactly the purpose of today. But Dawie, you can maybe just kick off and tell us a little bit more about your journey and why your interest in the economy.
Well, maybe I can just start off by saying that, when we've been using terminologies or words already like CPI and the repo rate and GDP and all sort of stuff, and people think that is what the economy is about. The economy is about interest rates and complicated formulas and graphs and things like that. That is not the case. The economy is about one thing and one thing only. The economy is about people. And that's how it started off for me as well. I've always been interested in people. I've always been interested in why people do certain things. Quite often you will find people do something that you simply cannot understand why they are doing this. And if you can understand what the motivation behind a certain action or a decision is, then you understand people, and then you understand the economy as well. And I guess that's how it started with me. I did not have economics as a subject. I've always been interested in people. And only afterwards, when I went to university, and one of my subjects was economics, that I really started getting interested in this subject. And I think in a way, economics found me. I didn't find economics. And I always tell people, I became an economist because it was the only subject I could pass. And that is pretty much the case. It's a subject that really, really grew on me. And ever since the first day that I opened my first handbook in economics, I became more and more interested in it. And I realized that economics is actually the study of people. And since then, my career went to all sort of loops and changes and things. I worked at the South African Reserve Bank for many years. And I went to the financial markets and I traded on the financial markets, on the capital market. I got fired twice in my career, which was a very good thing because that forced me to make very uncomfortable decisions. Like, for example, starting your own business. It's not easy to just do that, especially if you have a family to look after. And I was forced to do that, which was a good thing. And then I realized, but I can. And we started the business, and today we have quite a large business, I would say, a couple of hundred people working for us. We're responsible for many, in fact, hundreds of billions of rands with many, many financial instruments. And my job is I'm a director of the business. Well, I'm director at various of the companies within the group of businesses. I'm personally responsible for one of our companies called Efficient Private Clients, where we run local and international share portfolios. And of course, I'm responsible for economic research and political research and that sort of stuff. So I do economic stuff and political stuff, but I'm also responsible. I've got certain executive responsibilities within the group as well. So there's a short summary of my career. And like I've said, economics found me. I didn't find economics.
Okay, such an interesting story. And then I just want to, before we digging deeper into all of this, remind the viewers, please subscribe to the channel and also go to the link in the description where you can enter our monthly giveaway competition, where you can also win one of my books, Financially Fit and Wealthy. But now we have said that sometimes the economy, it sounds complicated. It sounds as if it's only for clever people to understand. So, Dawie, you can maybe explain to us the economy in layman's terms.
Well, I started off by saying that economics is about people. It's a study of people. It's allowing you to understand people. So when you talk about the economy, there must always be people involved some way. And I will go as far as saying that all decisions that you will always take are always economic decisions. All decisions are always economic decisions. Even a decision on who you want to get married to is an economic decision because it's an exchange of love, for example. Of course, a family farm can play a role there as well, but getting married is an economic decision. So all decisions are always economic decisions. But I guess the subject economics. People, when you talk about the subject economics, people think of economics as something that's got to do with money somewhere. Of course, you always have to have people, and I guess including money in the equation of the definition for economics is perhaps not a bad idea. But I think you also have to include some other variables or other things, like, for example, trade. It's important, the exchange of things, exchange 10 sheep for 1 cow, for example, that is typically economics. So I guess economics got anything to do with the interaction between people, usually involving the exchange of things. I guess that is economics. The official definition for the subject called economics is the study of markets. So I guess it can be the markets of equities, there can be the market for capital market instruments, there can be a market for cattle, that can be the market for love, for that matter. And in fact, economics always even extend to things like, for example, happiness. There are economists that study people's happiness. So that's also economics. So, but the official definition, like I've said, then is it's the study of markets. But I would like to throw the net even wider and saying it's the study of the interaction of individuals with one another.
Okay, that sounds great. And then what are typically the factors that will impact now on this economy?
Well, there are so many factors that can impact on that. Let's use a narrow definition of economics. Let's say it has to do with trade, people buying and selling stuff on a market somewhere. Now, the factors that affect this are, there are so many. So just think of yourself, if you go to a local market, let's try to keep it simple. You go to a local market where you can buy fish and vegetables, and you can buy clothes and soap and whatever the case may be. So what are the factors that is going to affect your decision on buying these various things? Now, the factors that's going to affect you is whether you can actually get to this specific market. So transport, for example, is a factor here. Are you going to walk there? Is it far away from you? Are you going to take the horse, or do you have a fast car? Infrastructure play a role here. Is there a road to the new market there? Or are you simply going to zoom in like what we're doing now to this market? Can you order something like on Takealot, for example? So infrastructure is also a variable issue. Another one is, will you be able to get there safely? And that, of course, means that do we have a proper police force? Do you have a defense force to be able to get there before you get robbed on the way? That's also part of the economy. And once you get to the market, can you actually afford it to buy the soap and the fish and whatever is on offer? And that depends on whether you've got a job or not. And that also depends on the question whether soap and fish and vegetables will be on offer. So somebody will be supplying all this sort of stuff. And there are variables, a number of factors affecting the seller of these produce. And of course, we always know that the politicians are there, the parasites, let's call them what they are, the people running the market, the people that extort, getting money out of you for providing protection. So then we're talking about taxes and all that. So when you talk about the economy and you talk about markets, just think about you going to a local market and you will realize there are so many various factors and influences before the actual transaction takes place, where you buy a piece of soap, for example. There are so many things before you can actually put your money on the counter and say, listen, give me 1 bar of soap. So I guess all those factors are factors and things that affect the economy. And that's exactly what economists do. They will study the effect of infrastructure on the efficiency of a specific economy. They will study the effect of various manufacturing processes on an economy. They will study the effect of the efficiency of governments on that specific market. And the list goes on and the list goes on. So it's very, very clear by simply looking at this simple example that this thing that we call the economy is hugely, hugely complex. And that also actually illustrates a very important point. There are many ideological approaches, many different ideological thinking behind the way that an economy should be managed or organized. We know the two extremes is a total laissez-faire or a free market approach where everybody says everything should depend on the individual, and the individual should own everything, and the individual should be allowed to take his or her decisions by him or herself. The other extreme is a socialist kind of approach, or a communist kind of approach, where we say everything belongs to everybody, and a group of economists somewhere will decide how to allocate resources in the economy. So it's not only a matter of going to the local market, it's also a matter of the political environment that applies to that local market that will determine how various economic activities will take place. So defining the economy is nearly impossible. And to try to put an economy in a handbook is completely and totally impossible, because there are so many things that affect the economy. And I guess the answer in the end is, it's because there are people involved in this whole thing that makes this whole thing so extremely interesting, but also so extremely complex, and also making this whole thing so completely it's completely impossible to put this whole thing into the mind of one certain individual, or even in the hands of a committee. The best that we can do is to leave it to the individuals, and quite miraculously, this thing that we call the economy will happen all by itself.
Yeah, so there's almost all of these interdependencies and factors like impacting on each other. And I think then the one thing as well, we often hear that the economy is struggling or is not performing well. But how do we know when is the economy struggling or performing well? Is there some kind of calculation, benchmark, or how does it work?
Well, we don't really know, but we want to know. And that's why economists, they've constructed a number of indices, they've constructed a number of instruments to measure the economy. Now, one of those measurements that we've constructed or put together, or one of those instruments that we've designed, is what is called production. And then the most popular one of those is gross domestic production. And it stands, the abbreviation is GDP. So everybody talks about GDP. And basically what GDP is the total production in an economy consisting of goods and services. Now, let's see if we can simplify that in some way. Let's assume, and that's economics. We always assume something. So let's assume we only produce one thing. And let's assume we are a farm, the country, and we only produce maize. That's all, nothing else. So the total production on our farm was, say, 100 bags of maize. So we've produced 100 bags of mealies, and next year we produce 110 bags of mealies. So our GDP increased by 10 bags. So economic growth in this economy was 10% in this example. So, but when we actually do the calculation of GDP in the real world, we want not only to measure the production of maize, we want to measure the production of cattle and of milk and of wool, and also certain services like how many teeth were pulled, how many appendices were removed, and even some other, all those services and things that we produce in the economy. We try to include all of that and add it all together and then come to a number, and we use that to calculate economic performance. But economists don't even agree on what to put into this basket. For example, if a housewife makes dinner for the family, should that be included in GDP or shouldn't it? Let me give you a very funny example. Say, for example, certain illegal activities. There are many illegal activities in some countries. But if you make use of the services of the woman of the night, that is a service that you pay for, and that is included in economic activities officially. But if you marry her, then it's excluded from economic activity. So there's one example of the curiosities within this calculation of GDP. Let me give you another example. If you put in a new window because the window has been broken, because the kids have been playing cricket around the house, that is included in economic activities. But the fact that the children broke the window in the first instance doesn't mean that the economy got smaller. So that's excluded from calculating the economy. So there are many examples, but we try to measure economic activities by looking at all goods and services in the economy. And the good thing about this is that it's full of mistakes and it's completely wrong. But the really good thing is at least it is consistently wrong. So over time, there's a trend that one can pick up, and we can see that we are producing either more or less things in the economy. And of course, there are many factors that affect that. Now, we know that the South African economy now is in a recession, and a prolonged recession. And again, depending how you measure that, but in a prolonged recession. And it is, if you look at the way that we calculate GDP, we can see that we have been producing less and less over time. And if you factor in the fact that the South African population has been getting bigger and bigger, then it's very clear that in the case of South Africa, we are in very deep trouble, because the total production of goods and services, the way that we measure that, is actually falling behind the increase in the population, which means that on a per capita basis, we are getting poorer and poorer in South Africa. So the answer to your question, it depends on what you mean. But economists are trying to put things together in order to be able to measure this thing that we call the economy, and making use of the current tools that is available to us. I have to tell you, we're not doing very well.
Okay. Now, I think thanks for sharing those examples. I didn't know that, but Dawie, I think then you said now that our economy is shrinking, but what can we really do to strengthen the economy?
Well, okay. So if we want to, the economy is getting smaller, the way that we measure that, I just want to keep on mentioning that, because quite often you will find people sitting on a beach somewhere. They're not interested in fishing or to get wealthy or whatever. They are very, very happy to sit on the beach. That's what they want. And it's not for me to criticize them. That's what they want to do. But at least the way that we measure it, the way that we measure production and services provided in the economy, your question is actually, how can we get people to produce more of this stuff, to produce more maize, more socks, pull more teeth, or whatever the case might be. So how can we stimulate more economic activity? And there are various ways of doing that. Basically, there are two major forces in the economy that we're all aware of. And the one force is the demand side, you going to the market wanting to buy tomatoes, for example. And the other one is the supply side, the guys manufacturing or producing the tomatoes and selling it at the market. So how can we stimulate more tomato production? There are various ways of doing that. You can tell people that, listen, people are coming over for dinner tonight. There will be a huge demand for tomatoes. Go to the market and buy a lot of tomatoes. So increase the demand for the tomatoes, and the supply side will react to that. That is a so-called demand stimulation in your economy. Or you can go to the farmer and tell the farmer, listen, the housewife is expecting a lot of new guests tonight. She will need a lot of extra tomatoes, so start producing more tomatoes. So there are two simple examples on how you can stimulate that. But there are many other ways that you can stimulate this as well. You can make it easier for the housewife to get to the market. So better infrastructure as an example. Or you can make it easier for the farmer to produce more tomatoes by genetically engineering tomatoes, for example, to produce more tomatoes. So it's very clear that there are various ways of getting more tomatoes and more tomato production. And more tomato production, of course, means that the economy will be getting bigger. There's another variable that is very important as well. So apart from infrastructure and safety and genetic engineering and people coming over for a visit and all those normal factors that we can think of, there's another very important factor, and that is trust. or confidence. So if I have trust and confidence in my environment, then I relax and I don't have to worry about safety, as an example. I don't have to worry about the fact that the politicians are going to steal my tax money, for example. I don't have to worry about all sort of things. Somebody's going to steal my car or whatever. The same for the producer. He doesn't have to worry about his farm that can potentially get stolen. Or you won't have access to fertilizer. So if confidence, trust in the system is high, then that tends to support economic activities as well. And in fact, economists measure this. And there are various indices that measure trust or confidence in the economy. And without a doubt, these various indices correlates very, very closely with economic activity generally. So I guess the answer to your question is how can we support economic growth is quite wide. We can do so many things, but in the end, you have to make people feel comfortable and happy with the environment before they actually participate in the economy. Because another important variable in this whole process that we call the economy is investments of wealth. It's not only a matter of you going to the market and buying new tomatoes. You have to invest in a car to go to the market. The same for the farmer. He's got to invest in producing. He's got to buy a farm and buy fertilizer, and it takes some time before he can actually produce more tomatoes. So he's got to invest in the farm or in the factory for that matter. And you have to have confidence before you take that step, because you have to put a lot of money and a lot of time and a lot of effort in there. And if the risk is there that somebody's going to steal your farm, for instance, then you lose confidence and the production of tomatoes will suffer because of that. So it's again, it depends, and there are many various factors that contribute to this whole thing. But I think trust is one of those very important variables that indicate whether an economy will be successful or not.
Okay, Dawie, thank you for simplifying it. I like how you shared all of these examples. Then I also want to ask you about inflation. I think we often hear about inflation, and the inflation is quite low, and then you go to the supermarket and you see all these increases in the prices, and you do not really understand where all of this fit in. So maybe you can just tell us a little bit more about inflation.
Before I get to inflation, Ronel, if I may, I think it's important for us to talk about money. What is money? Because people might think you know what money is, but quite often I realize people do not understand money. In fact, there are many economists, and I'm not excluding me from this. I think I also do not understand money that well. But what is money? And we have to, maybe before we get to money, we have to just take another step back before we get to money. One of the things that makes an economy successful, one of those primary things, one of those major economic breakthroughs was that we started to trade with one another. We started to exchange stuff. So you go to the market and you give a sheep for a bag of tomatoes, as an example, and you and the seller, both sides of this transaction, gain from that, because otherwise the transaction would not have happened. So even if there's a barter trade, an exchange of things, both sides of the equation gain from a barter transaction. That's very important to understand, because since you still have one sheep and one bag of tomatoes, but suddenly it's worth more. And let me just repeat that. Suddenly it's worth more. So somehow the fact that we've traded increased the total value of the same things in the economy. But it's very difficult to trade with one another because maybe I've got a sheep, but I don't want tomatoes. Or I've got a cow and I want the chicken. Now I have to exchange my cow for 10 sheep and 1 sheep for 10 chickens. And now I've got 9 sheep I don't want and 9 chickens I don't want. So clearly, barter trade's got some obstacles. And one of the other, apart from perhaps the invention of alcohol, but one of the other major breakthroughs in economics was the invention of money. Because money makes it possible for people to use something between the sheep and the tomatoes. And I can actually buy now whatever I want to. So I can exchange my stuff for money. and I can keep my money in safekeeping somewhere, and I can tomorrow morning or a day thereafter use a small part of my money and buy something that I need. I can use money to save, and I can use money to buy things, and I can also use money to measure things. So, for example, this thing costs 10 Rand, and the other thing costs 100 Rand, for example. Therefore, the 100 Rand thing is more valuable than the 10 Rand thing. So you can use that as a measurement to measure the price of various things. So money is very important for these reasons, but money is also very important because of exactly the last point I've made. It can give you relative values. This thing is more important than the other thing. And that is why whenever we use a measurement to measure things against one another, if you use a ruler to measure a distance between two objects, as an example, it is important to use a ruler that can be trusted. If you use a rubber ruler, you cannot measure the distance between things because the ruler keeps on changing its length. And that is what inflation is. You use a ruler to measure the relative value of things, but this ruler is made of rubber. And money, inflation means the continuous fall in the value of your currency. It keeps on stretching, or it can mean the continuous increase in the prices of most goods and things. So most people see inflation as the increase in prices, but it's better to look at inflation as the fall in the value of money. And money, if money falls in value for whatever reason, and we can talk about the reasons why money falls in value, we get an increase in inflation. And because we have an increase in prices, generally speaking, suddenly we cannot get a good concept or a good idea of the value of things because our ruler now is made of a rubber. And now it becomes much more difficult to trade because we don't have a good idea of relative values, because relative values keep on changing. And that undermines trade in your economy, and that undermines economic activity. And that's what inflation is. Prices going up or the value of your money going down, and it is always a bad thing because it undermines economic activity.
Okay, thank you. And again, a good example with the ruler. And then, Dawie, another concept that we heard a lot about this year was the repo rate. So, what exactly would the repo rate be, and when would the Reserve Bank typically be increasing or decreasing the repo rate?
Okay, so again, let's start off with money. Remember, money used to be issued by the private sector mostly, and we used all sort of things for money in the past, like gold or cattle or shells or whatever the case might be. But in a modern economy, money is issued by one institution only, and that institution is called your central bank. And in the case of South Africa, it's called the South African Reserve Bank. And the South African Reserve Bank has a monopoly on the creation of money. And it's only the South African Reserve Bank that is allowed to make money. And indeed, that's what they're doing. I know some people try to make money by photocopying a 100 Rand note, for example. That's illegal. You're not allowed to do that. But the Reserve Bank can do that. They are literally allowed to make money. And the funny thing about making money is the South African Reserve Bank, like most central banks in the world, can make money out of nothing. It's called fiat money. So we've got fiat money in the world where central banks can make money out of nothing. Unlike in the past when we had the gold standard, for example. So what happens now is that the central bank typically, in the case of South Africa, the South African Reserve Bank, will measure prices. So they have a whole basket full of things, and they see this same basket of things. Does it increase or decrease over time in price? Over time, 1 year to the next, for example. And if they see that this basket of things, which is supposed to represent the average consumer's basket of consumable goods, if this price of this basket of things keep on increasing, it tells them that the currency is keeping on losing value. All right. So they want the currency, the rand in the case of South Africa, to maintain its value over time, or relatively well over time. Now, in the case of South Africa, the South African Reserve Bank allows the currency or the inflation rate or the price of this goods, the basket of goods, to go up at the rate of between 3% and 6% per year. So if things go, the price of things increasing at a rate more than 6%, that means something is wrong, and the Reserve Bank has to do something about that. Remember, the Reserve Bank creates money out of nothing, and they put this money into the system, and this 100 Rand that the Reserve Bank puts into the system is via a process called the credit creation process, is being made more by central banks. It's a bit of a complicated process, but it's actually quite easy to understand. So 100 Rand goes into the system from the Reserve Bank. It's deposited at the bank, and the bank lends it out to somebody else, and that other person spends it in the economy, and it's redeposited back at the bank, and the bank lends it out again, and it's spent again, and redeposited back in the bank, and the bank again. So there's this circular movement where the 100 Rand is being lent out, spent, and redeposited back to the bank many, many times. So if you think you've got 100 Rand at the bank, you are making a big mistake, because your 100 Rand has been lent out again already. All right, that is just a credit process. But this process, if it happens too quickly, it means that a lot of money is being created in the economy, and the Reserve Bank may get a little bit concerned, because all this money is being created, it increases the prices of goods, or the value of money starts coming down, and the Reserve Bank wants to stop this money creation process or slow it down. And what they then do is they increase the price of money, and that is the repo rate. Because at the end of every day, there's always a shortage of money in the system, forcing the banks to come and borrow money from the South African Reserve Bank, and the South African Reserve Bank, then will lend it out at the banks at a certain price, and that price is called the repurchase price. And we could simply call it the repo rate. And that is the price of money that the central bank sets in the economy, and the banks then will pass on this price increase to their customers, and that will slow down the lending and spending and redepositing process of money creation within the economy. So that is what the repo rate is. The last Rand in the South African economy and in all economies in the world is always borrowed from the central bank, and the last Rand is always borrowed at the repo rate, and therefore the repo rate affects all other interest rates in your economy. And the Reserve Bank uses that to affect the value of the currency, which means they use that to try to influence the rate at which your currency goes up and down in value, and that's how they try to target inflation.
Okay, that was very well explained. Then I think if we also think about the annual budget, I think often people just think about the budget as I'm going to pay more tax. But maybe you can just bring that in context and just explain the bigger picture to us.
Okay, well, I guess before we can get to the budget, there's another step that we have to take back and to understand what this whole thing is. And this whole thing is that I guess we have to start with a thing called a country. What is a country? And a country, I think in the case of South Africa, we think of a country as a geographic area. We think of a country as a place with an army. We think of a country as a place with a government. We think of a country as a place with a passport or with people. And we think of a country as a place that is recognized by other countries. But basically what a country is nothing but an agreement between a bunch of people. You and I and all the other people in this place that we call South Africa, we have decided that from now on, we're going to, put a lot of our eggs in this basket called South Africa, and we've created a country. But in order for this thing to work, there are certain functions that needs to be performed by the state. And in order for the state to function, we've decided through a certain process, we call it the democracy in South Africa, that we're going to elect some people to run the state on our behalf. And they are called the government. I know quite often the politicians in South Africa think that they are the state. They're not. They're simply running the state on our behalf, and we kick them out of office every now and again. That process is called democracy. But it costs money. It costs money for the state to do certain functions, to perform certain functions. And we can debate on what functions the state should perform, but typically the primary functions of the state are things like defense and policing and the judiciary and maybe infrastructure and maybe education and maybe health services and so on, because in many instances people reckon that shouldn't be the function of the state. But whatever the case may be, we in South Africa, we've decided that the state should perform certain functions. And in order for them to perform these functions, they have to get money somewhere. And then they've implemented certain taxes on the people of South Africa in order to fund these functions of the state. Now, the most important tax in the case of South Africa is personal income tax, by far the biggest one, followed by value added tax, followed by company taxes, and then a lot of other taxes like the so-called sin taxes and fuel levies and all sorts of things. And that makes up the total revenue of the state, and they use that to fund all these various functions, like, for example, defense and the like. Quite often what happens, well, in fact, what usually happens is that the state spends far more than what they get in by way of these taxes, and that difference is referred to as the fiscal deficit, and that's the amount of money that they go and borrow. So on top of all these taxes, they go and borrow a lot of money in order to fund the spending of the state. And that whole plan on where the money is going to come from, where the money is going to go to, where they're going to borrow, that whole plan is called the fiscal budget. It's exactly the same as an individual budget in a household. Where are we going to get the money? What are we going to spend the money on? And how are we going to pay off the credit card, for example? The same goes for the state as well. And this annual budget, the plan is delivered, or the Minister of Finance will deliver his budget speech in February every year. And by the middle of the financial year in October, he will usually amend this budget, the numbers, and report back on how things are going. And then in February, there's a new budget. So basically, this is an opportunity for the Minister of Finance to change certain taxes, to make certain changes to state spending and the like. The state is very big in South Africa. It's more than a third of the total South African economy, the way that we measure it. And in some cases, in some countries in the world, it's even bigger than that. And of course, we know that the state in South Africa is not very efficient. There's a lot of corruption, mismanagement of our tax monies. And that's why people are getting quite angry, because they have to keep on taxes, but the state mismanage all these monies. And that's why there's even talk of a so-called tax revolt, which of course is illegal. If you do decide not to pay your taxes, believe me, SARS is going to start looking for you. So the best way actually to make sure that our tax money is well spent is to make use to the most powerful instrument in the hands of the people of South Africa, and that's the pen. Make sure you put your cross behind the right political party.
Absolutely. I think very good advice there. But Dawie, you have explained the whole economy and all the concepts so well to us. But if we think now what we've been through now the last year and almost a half in terms of the worldwide pandemic, how would you say did all of this impact on the South African economy?
Well, the way that we measure the economy is by adding up how much tomatoes and fish and things are sold and consumed in South Africa. And what happened with the pandemic is, of course, not the pandemic. It was the lockdown because of the pandemic that caused all this damage, because the lockdown prevented us from going to the market. The lockdown prevented us from producing things in the economy, and it was inevitable that this lockdown will have a huge impact on how much we can produce and how much we can consume in an economy. And if you produce much less and you consume much less, then the factories don't work and they need people, and a lot of people can get fired. And that is indeed what happened. So in 2020, the South African economy contracted based on GDP numbers by about 7%, and more than 1 million people lost their jobs in South Africa. And now we're really battling to get back to where we were previously. And we were, in fact, already in trouble previously because of the mismanagement of the South African economy by a dysfunctional state. And now we had the lockdown on top of all of that, and it had a huge and a massive impact on the South African economy. And the result of that is a huge increase in unemployment, a huge increase in poverty, and of course, a contraction in overall economic activities. And many people know about this firsthand. Many people know that they've lost their jobs or they had to take a pay cut, they had to postpone that holiday, or they have to sell their house and moving with your parents, or whatever the case may be. So the lockdown had a massive impact on the South African economy, exactly the way that it had on all economies in the world, and the world economy is, in fact, severely affected. But there are signs that things are picking up. The economy is gradually getting out of its hibernation, but it will take many years, perhaps, in the case of South Africa especially, before we get back to where we were previously. So this was, I think, the way that the lockdown was managed in South Africa was, to a large extent, wrong, because people quite often say, you cannot put people's lives ahead of economic activities. I disagree with that, because the biggest killer in the world is not a virus. It's not TB. It's not cancer or anything like that. The biggest killer in the world is poverty. Poverty kills far more people than all of these other nasty things put together. And by locking down the economy, you increase poverty and you actually increase deaths with this lockdown in the economy. And also keep in mind that an economy grows like a tree. It grows on itself. And if there's one drought year where the tree didn't grow, that year will be with you forever, because it's impossible to go back to yesterday. And if you cut up a tree, you can see by looking in the rings, the growth rings of a tree, you can actually count the number of drought years that this tree went through. And that's the same with an economy. By going back into history and going back into the data in South Africa, we can see where we had drought years in South Africa, and we're still in a very severe drought in terms of economic activities.
Yeah, I think that is unfortunately a very sad reality for all of us. But then we also know that usually together with all of these things is always these opportunities coming as well. What would you typically say are the opportunities out there in South Africa given our current economy?
Yeah, I think, again, if you allow me just to step back a little bit, and it's important for us to understand that things changed a lot the past year. Things changed a lot the past decade. Things changed a lot the past 100 years, and the last 10,000 years, and the past 100,000 years. Things change. That's the nature of this thing that we call the economy. And in fact, if you look at how things change, I've got the impression, or I've got the sense, that things change faster today than what had happened 100 years ago, at least in terms of technological changes. Things are changing very, very rapidly. And if you look at the composition of economies today, you will find that economies today are centered around what you and I are doing now. It's centered in the tertiary sector. It's centered in the cloud somewhere. It is centered in things that is service orientated. It's centered in things that are digitizable. I don't even know if there's such a word. It's centered around things that it can be, that is electronic of nature, which you can, it's centered around things like, for example, which is information to a large extent. And you can see it in various examples. So it's nothing new today to have a meeting like you and I have at the moment. We didn't have this 2 years ago. I mean, I didn't even hear of the word Zoom 2 years ago. When you go and buy stuff now, quite often, you will not go to the market and pick a fish anymore. You will go on your computer and somebody will deliver it at your gate for you. Or you will order things online. That means it's got a huge impact on shops. People don't go to shops the way that we used to go to shops anymore. The way that we used to work has changed completely. I wanted to put in skylights in my house during the lockdown. I couldn't get somebody to put in skylights because he was putting in skylights at everybody's house, because everybody realized all of a sudden they're working in a dark place. So it's changing the way that we are living today. The city centers, people are leaving the city centers and they go and live in the suburbs, or move to the sea. Go and live at the sea, for instance, as long as you've got a good connection. So there were certain trends, and this is nothing new really. We had all these sort of trends were there before the lockdown, and before we've even heard of a place called Wuhan. All these trends were there already, but the lockdown simply accelerated existing trends to a large extent. And that's where the opportunities are as well. You have to realize that the nature of economies have been changing. They will continue and keep on changing. It's probably going to become more concentrated in the service industry, in the digitizable kind of place of the economy. Generally speaking, in the tertiary part of the economy, agriculture will still remain important, but far less than in the past. Today, if you want to be involved in agriculture, become a geneticist, as an example. Mining will still be important, but far less than in the past. Having a factory will also be important, but also far less than in the past. Having skills to be part of the tertiary economy and having a good connection, that's what's really going to matter in the future. Of course, we're still physical physical beings. We still have to look after our physical safety. You still have to eat. You still have to live somewhere, and you still have to wear clothes. But the nature of work and the nature of this thing that we call the economy has changed dramatically. And it will keep on changing. But if you stand back a little bit, you will realize it's nothing new, really. All that has happened is that existing trends simply accelerated, and that things will, in future, will probably be more concentrated in the other part of the economy. And that's the wonderful thing about the economy. Many jobs will disappear. Many businesses will disappear. But that's a good thing, because that's the nature of the economy. It keeps on destroying things, jobs and businesses, but in the process, new kinds of jobs and new kinds of businesses are created as well. And it's a continuous process of creation and destruction. And it's a good thing, because there's a name for it. We call it progress.
Okay. Now, I like that. I think there's already a little bit of hope in that message. But Dawie, I want to ask you the last question for today. Given your experience, what we have experienced now during this lockdown period, what would your message be to South Africans given the current state of where we are?
Yeah, I can give you a long answer to that, and I have a long answer to that. But in short, the following: know what is going on, be safe personally, make sure, because South Africa is a dangerous place. So know what's going on, be safe. Try to identify those risks that you can identify in whatever you do, and try to manage those risks as well as you possibly can. Make sure you have the necessary skills to participate in this wonderful thing called the modern economy, and make sure that you have a proper connection, internet connection, because that matters. And perhaps the last comment that I can make is that, yes, we're all concerned about the future of this country. We're all concerned about many things, rightfully so. But, like we said, the economy is a process of destruction and creation. Keep open your eyes and look out for those opportunities. They're going to be there. And very importantly, try stuff that you don't think you will be able to do. And you will be amazed on what you are capable of doing.
I absolutely love that. Thank you, Dawie, for sharing that. And thank you for giving us a message of hope. And I definitely agree, there's always opportunity out there. So, Dawie, I want to thank you so much for your time today. Thank you for your willingness to come and demystify a topic or a subject that's often quite complicated to people. I'm sure the viewers will have a much better understanding and how all of these interdependencies and all of these link together. So thanks a lot for spending some time with us today. I really appreciate that. And I'm sure the viewers have really enjoyed this discussion today. And then I want to invite you once again to subscribe to the channel and enter the monthly giveaway competition. Then I will see you again at the next Ronel Talks Money show.